Hello, good afternoon. You're watching Closing Trades and we have a mega rally at our hands today. The Nifty is considerably higher. Of course, we have hit the record high level, 22,330 thereabouts, 350 points higher. But the real mega rally is actually in the Bank Nifty. A 1100 mammoth rally is what we are witnessing on Bank Nifty. All the constituents are in the green. The bulk of the rally, of course, is coming in from ICICI Bank, which is up 3.25%, SBI up 3%, IndusInd Bank, SBI, PNB, Axis Bank. All of these stocks powering the Bank Nifty ahead, and no wonder then that solid 1100 point rally there. The broader markets, that's the mid-cap and the small-cap indices, are actually underperforming today. Now, given that 2.5% move that we have seen on Bank Nifty, of course, the 1.5% move pales in comparison. But nonetheless, we have a very solid rally at our hands. And individual names that deserve mention. Let's start with L&T itself. It's a mega rally of almost 5% that we have seen on that stock. It's the biggest single session gain that we have seen on L&T in over 3 years. A few reasons because of which it's actually reacting. Of course, at the start of the trading session, we got the news that the company has commissioned its first hydrogen electrolyzer plant ahead of what the street was expecting. So that's the positive. They have been bagging large orders in Middle East as well. That has been supporting the sentiment. And today again from the defense pack, almost 13,000 crore order inflow coming their way. And all of that has augured well for the stock. And it was a bit, sluggish in between. So there was that valuation catch up. And recently we have seen upgrades as well in terms of target price. People are easily pegging in value of 3,200, 3,500 on the stock now. So clearly there's a bit of a catch up happening there. But then there are other names as well. Auto stocks in focus, healthcare in focus, and the latest news flow on Dr. Reddy's.
Oh yeah, absolutely. We'll just address that in a short while from now. But Shilpa, Medicare, the US FDA is inspecting their Hyderabad facility. So that's another stock which has been in focus today. And the February auto sales as well have begun to trickle in. And here's what the scorecard looks like. We've got M&M as well as Escorts Kubota, which have all been sub what the market was anticipating. But it's an above count for Bajaj Auto, for M&M. The auto division, that's managed to impress the street. Tractor, of course, has been weak. Eicher Motors, that's RE, has done well. And for Tata Motors, both the CV as well as the passenger vehicle segment has actually been above count. In fact, since we're talking about autos, let me quickly take it across to Srishti as well and get in some more info on how the dispatch figures have been so far. Srishti?
Well, yes, the numbers have been great so far because apart from the tractor division, all these divisions from the likes of commercial vehicles, surprisingly, two-wheelers as well as passenger vehicle segment have done well. Let's talk numbers then from the passenger vehicle segment. We have the numbers from M&M Automotive Division as well as Tata Motors on a YOY basis. Both the companies have registered a jump of 19 to 24% and both the numbers are actually above than what we were expecting at ET now. And we also highlighted our viewers that passenger vehicle segment, the stable demand continues and the SUV demand continues to be strong, and that is what we are seeing reflecting into the numbers. Talking about the commercial vehicle space, we have the numbers from Tata Motors. We were expecting a weak set, but the companies has delivered a better set than what we were expecting. 35,085 units is what they have reported, but do note that on a YOY basis, this is a decline on a YOY basis of 4%, and a lot of analysts believe that before the elections, the commercial vehicle segment could be a lag. Talking on the two-wheeler segment, Bajaj Auto has came out with a good set, 24% jump on a YOY basis, and also a surprise coming in from Eicher Motors Royal Enfield, where we have seen a jump of 6% and numbers better than estimates. And like I told you, on the tractor division, both the companies from the likes of Escorts as well as M&M, they both have disappointed a bit, and M&M have also cited that because of the deficit rainfall, especially in the southern and the western regions, this has impacted the crop, but they are positive on the Rabi growth and the demand ahead. So that's the scorecard coming in from auto sales. Back to you.
News coming in on Dr. Reddy's as well, the stock as well, Srishti, reacting sharply. Break it down for our viewers.
Well, yes, Dr. Reddy's just come out with a notification where they say that they have been named as a defendant in the complaint made public in the United States District Court, and this is related to the one of their key drugs for Dr. Reddy's, that is G-Revlimid, where they are highlighting that the complaint asserts that the federal antitrust law is alleging that Dr. Reddy's, acting in connection with the other players, improperly restrained competition, which in turn helped them. They also maintained a shared monopoly in the sales of G-Revlimid, it. And not just Dr. Reddy's, this complaint has also included the names of the likes of Natco Pharma, Teva Pharma, and these are the companies that are also involved in this particular litigation. Now, the complaint alleges that they have challenged the agreements improperly, delayed the generic entry until 2022, and then improperly limited the generic competition through 2026, so that all these companies could actually benefit out of it. And this is something that Dr. Reddy's has made public. And but though Dr. Reddy's has also said that they believe that the allegations against it lacks merit, and they will definitely defend this litigation. But if this goes through, then this could be negative for Dr. Reddy's. Why so? Because there could be some monetary compensations that could come in play, and that's why the stock is also reacting negatively. Dr. Reddy's is down, but the key to note is also what Natco Pharma is doing. I believe that stock should also see some bit of a reaction on back of this news flow. Back to you.
Because Dr. Reddy's, for you, they will vigorously compete against this allegation. That's what they are saying. But there is no reaction as of now immediately. In L&T, there's also something to watch out for. Remember when the results came out just about a few days, 3 weeks back, there was a miss on the margins front. And since the stock had run up quite a lot, the stock actually saw a big cut after that and a few days of sideways consolidation. If you look at the last 1.5 month or 2 month chart pattern, and because that kind of corrective phase had panned out, now that the electrolyzer look at that, 3,400 went to all the way to 3,300, mid-Feb onwards, a rebound coming in. So positions were very light in that. Now the news of electrolyzers, Middle East, big order flow, and don't forget the big GDP number. This is the most sensitive stock to strong macros, and that is why Bank Nifty and L&T are reacting so positively in trade. The other pocket I'd like to highlight, and we'll get you some commentary going, would be the auto component space. Look at how Jamna Auto, Munjal Auto, and many other auto component stocks are rallying sharply in trade. That's because the Auto Component Manufacturer Association has given a guidance of almost $6 to $7 billion worth of capex, which is likely to kickstart and may actually happen next 3 to 4 years. We'll get you a slice of that conversation. But okay, we have Vinny Mehta, actually, the Auto Component ACMA Association head. We spoke to him around noon. Let's hear out what he had to say about this big capex which is lined up.
We believe that the industry is transforming in a very, very big way. We're looking at zero emissions. We have to prepare for that in EV, whether it's hybrids, whether it is alternate fuels. So you will see a lot of investment happening. Also, when you look at the vehicles, today the consumer wants bigger vehicles. You're seeing that in the two-wheelers. You're seeing a huge uptick in the commercial vehicles. You're seeing huge uptick when it comes to SUVs. So there is a change in the consumer, behavior pattern. They want bigger stuff. They want better stuff. And that apart, there are many regulations that are coming in, whether it is for safety, whether it is for emissions. So the value add from the auto component industry is growing very, very significantly. And that apart, we are readying ourselves for, transitioning to zero emissions. So all that requires a very significant investment from the industry. India, we believe, because our carbon neutrality deadline is 2070, we believe that the automotive space will be quite ICE driven till some time. But of course, we will see all the other alternate technologies coexisting. So when we talk about the investing in future, we're looking at all segments of the powertrain, whether it is ICE, whether it is CNG, whether it is electric, hybrid, and of course, work has started in terms of hydrogen and stuff like that. So all segments of the powertrain, you will see investments happening.
Coming in from ACMA, but metals pack, that also deserves mention. A solid 3.5% rally there. Of course, we did speak with the Steel Secretary exclusively, who talked about the entire growth prospects in India and the fact that there is no export ban per se being planned of iron ore, and all of that is having an impact. Steel companies, Kalyani Steel was logged in upper circuit the last time I checked. Tata Steel, JSW Steel, all of those stocks are buzzing around, and don't forget SAIL, that was up 8 to 9% the last time I checked. Let me take it across to Kunal to get a sense as to on the chart what explains this rally, because dollar was pretty much flattish. There wasn't any incremental news flow as such from China. What then explains this rally? Anything on the charts?
So, we discussed this 2 days back that the data on the rollovers would probably be of a lot more prominence. And, yesterday, post the expiry, when we analyzed the data, there was a very positive sign which was emerging for many of the fresh large cap name stocks, where there was dearth of short, there was a dearth of short built up into many of the larger cap names in terms of the open interest built up, and I think that was a positive sign, and that's why you're seeing the rally being a lot more fluid today, and more short covering happening for many of these names. So many of these large cap stocks, I think it's been a full packed large cap across the board sector rally for the indices today. We've seen the metal stocks doing quite well. Private sector banking names were the ones which led up first, and then the confidence grew back into the PSU banking names. And then you have the infra stocks, the likes of L&T, etc., also doing quite well. And now the other large cap names are also looking attractive. Reliance, etc., are making a comeback after the 2-day, 3-day of 100-point correction for the stock. So net, I think it's been a completely strong market reaction this time around, and I'm expecting this momentum to continue. What the Nifty has also done is now we are on the verge of breaking out of that 1,000-point consolidation, or a range which we started off in the month of December and January start. So we corrected from 22,100 to 21,100, 200. We are on the verge of breaking past about those levels, which means we could be looking at least another 800 to 1,000 point rally on the Nifty pretty soon.
Okay, so that's a take coming in as far as the markets are concerned. Let's welcome Vaishali also on the show to talk to us about what's happening. Suven Pharma is up 8%, Juniper Hotels is up. You also have some other sectors and segments like CG Power, Happy Forgings, also doing well in the trading session, while the hospital stocks, the likes of Medanta, Max Healthcare, Jupiter Lifeline, continue to be in the red. From the hospital space, Vaishali, is there any name that you would use this dip as a buying opportunity on chart looks strong?
Hi, very good afternoon. Actually, hospital sector on the whole is doing very well. In fact, in the cash category, I was just some time back, we had recommended Rainbow Children Hospital, and along with that, even Max Health. So we are focusing along with the frontline Apollo Hospital, these two stocks that we are following, and I think they are having a positive view.
The take coming in on some of the hospital names, although Apollo, after that slamming that it got yesterday, has seen a decent bit of recovery. It's a negligible dip, what you're staring on the stock price right now. But news just coming in, and disturbing one at that. It seems that there's an explosion that's taken place at one of the popular eateries in Bengaluru called Rameshwaram Cafe. The cause of the blast is not known yet, but several people, as we understand, have been injured, and more details are awaited on the same. Okay, continue back with the markets, considering it's really metals all the way and L&T which is leading the chart. The interesting stock to bring up right now would be also Reliance Industries. Look at that spike that has happened on Reliance Industries in just the last few odd minutes or so. It's on its way to now touch the 3,000 rupee per share print for the first time indeed. Kunal, quite a decent move on Reliance, 2.5% higher.
Yeah, so 2.5% higher. The stock has retraced. So 2 days back, the stock had fallen 120 point correction on a single day, and that was one of the major reasons why the Nifty and the Bank Nifty and most of the other indices, they had gone through a sudden sharp correction. So I think this could probably now negate the negativity which was built into the stock price. Stock breaking past about the 3,000 mark is also one of the key triggers which is waited for Reliance Industries. I would now believe that we could now be looking at post 3,000 levels. If we sustain about those levels, then we could now be looking at 3,100 to 150 as the next set of target for Reliance.
Okay, point taken. So that's a view coming in on Reliance. But quickly before we slip into the break, Vaishali also wanted your view on L&T and Dr. Reddy's.
One of the most consistent stocks in the volatile market that we had witnessed few days back. In fact, this is the stock which we have also recommended to our clients right from 33.50 levels. The stock today also opened with showing a lot of strength. And I think we are looking at a positional target of 3,800 to 4,000 from here on. So it's a positive view from our end. 3,200 acts as a crucial support. So it would be a buy now and also in dips for the target of 4,000.
For that chart check on L&T, time now to take a breather on the show. Don't go anywhere.
All right, let's take the discussion forward on markets. On the fundamental side, Rupen Rajguru is joining us now from Julius Baer. Rupen, afternoon. Rupen, there's a furious rally and a very shallow and reluctant correction, which was perhaps triggered by the nudge from regulator regarding small cap, mid cap, but that was bought into. You guys manage some of the most affluent investors across the country. When you speak with them, what's the feedback you're getting? Are investors looking at dips to be bought into? Are they worried about valuations? What's the positioning on the affluent investor side?
Yeah, hi, good afternoon, Ajay. So the overall mood of the investor definitely is upbeat, and India probably, I would say the stars are aligned. So be it on the macro side, micro side, or also on the liquidity side, we are clearly seeing positivity right now. Yes, these pockets, some pockets of the market clearly is showing visible signs of frothiness, and I think rightly so. The regulator has cautioned warning bells around that segment of the market. But overall, from a next say 5 to 10 year perspective, and when I talk to a lot of our big, large family offices, they all are very much aligned on the India story, and any dips is something definitely that is getting bought into, and that's the mood as we speak.
You're making a very valid point. All of that is fine. Are you comfortable to deploy fresh money even in this kind of a market, or would you wait it out? Even it could be a longer wait for a nice kind of deeper correction.
Yeah, it's a very pertinent question, and let me tell you, this question will be there irrespective of the market level. Let's assume if market were to correct 5% over next 10 days. I think this question will still remain, because post 5% correction, also the market will not get into that valuation which will look extremely attractive. From our perspective, yes, we are cognizant of the fact that the market has rallied significantly. So we are looking into those segments of the market wherein there is relative value. And what is happening is that over last 1 year, the B2G company has done the best, followed by B2B, and B2C has done the worst. And if you just flip around 3 years, 4 years back, it was exactly the reverse, wherein B2G was doing the worst and B2C was doing the best. So our endeavor is to identify those segments in the market wherein there is relative value. And to answer your question on allocations, if 100 rupees getting allocated on day one, we are allocating 33%. And over next 2 months, we intend to get fully deployed.
Rupen, around similar lines is the question on the PSU rally as to when is it going to abate. A lot of people questioning the valuations, the growth that these, stocks or multiples that they are running at. What is your prognosis? For a longer term, would you say stay put? This rally is here to stay?
Yeah, hi, afternoon, Aisha. The PSUs have transformed from being an ugly duckling to darlings of the market, right? If I were to just juxtapose or combine both PSUs and small and mid cap as a pact, and which has done exceedingly well. So why have they done exceedingly well? I would say there are 3 to 4 reasons that one might attribute. One is very strong government balance sheet, which is aiding order inflow plus timely payment for the PSUs. Two, I would say a strong liquidity in the system, which is helping essentially the small and mid cap stocks, because the capital raise has become relatively easy for them. At the same time, the banking system also has been quite okay for them to borrow. Third, I would say the overall activity what we are seeing. We have to be aware that it was extremely undervalued, say 3 years back, and now it is getting into fair value and probably now getting into overvalued zone. So I would say PSUs, but in particular, are cyclical business. So they all are witnessing a cyclical upturn. In fact, between 2003 and 2007, similar story played out, when in the PSUs as a pack, the PE went up from 5 times to almost 20 to 23 times. This time around, from 7 times, it has gone up to 27 times. So to answer your question, at this juncture, we are not comfortable with the valuation because now a lot of these are priced to perfection. But in a bull market, which has a lot of liquidity chasing some stocks and some of the PSUs, I would caution that has an extremely low amount of free float and they are getting bid up extremely high. And I would definitely be cautious about such kind of PSUs which has a low free float. But at an aggregate level, probably some of the PSUs banks still have some legs to move around from here. But otherwise, I would be cautious on that segment.
And selective, that's how one has to be when you are looking at the PSU space. Thanks, Rupan, for making time and speaking with us today. In the meantime, before we head into that short break, pull up the intraday chart of TVS Motors. You have the number at the bottom of the screen. Good beat coming in, 3.68 lakh units versus 3.22 that we were expecting, and there's a single way uptick on that stock, now sitting with a gain of almost 4 to 5%. So that's one of the stocks which is doing okay. You also have Juniper Hotels, one of the recent listing from that pack, that's up 10% as we speak. You also have PNB Housing, which has actually managed to perk up in the last few minutes. We were just talking about how the GDP data was strong and it has a correlation to L&T. There's also other industrial names, the likes of Action Construction, CG Power, for instance, which is also reacting to the news of its OSAT facility getting cleared yesterday in terms of the semiconductor names. And Oil India is something that is also reacting quite positively in the last few minutes. So a lot of names really to track. But we have to take a small, break on the show. We'll see you right back in a couple of minutes. Welcome back. It's going good for the market. Nothing really to complain as such. We're sitting at the highest point of the trading session and very steady moves coming in. So it seems like the rally, at least for now, is getting consolidated. You also have Bank Nifty up 1150 points, and the mid cap and the small cap indices still are sitting with gains of around 1.5%. Within the broader market, take a look at Metropolis Health as well. That stock is up 7%. You also have IFL Finance, which is perked up in the last few minutes, though Max Healthcare continues to be down. Global Health, Ajanta Pharma, Policy Bazaar, Z Entertainment, these are some of the stocks which are on the back foot. But shifting focus and welcoming on board Rajat Sharma from Sana Securities to talk to us about what he makes of the market. Rajat, let's begin by discussing the metals basket, right? That's one of the top leaders today. Is that a space that you like? And if yes, within that as well, ferrous, non-ferrous, where does the preference lie?
Yeah, so the only stock in the metal space which I ever owned was the Steel Authority of India, and right now I don't have any metal stocks in my portfolio. I find, apart from metals, actually I find pretty much all pockets of the market very, very expensive, and I think the right thing to do in such market would be actually to reduce your allocation to equities, and that's what I've done for many of my client portfolios. Other than that, now, of course, there are clients who are very high risk takers. They want to stay invested for 4-5 years. That may be a different thing. But broadly, I've actually taken some money off the table. So for most of my portfolios, I'm holding about 40 to 45% in fixed income bonds, and I've allocated around 8 to 10% to gold as well. So that's the main change I've made to my portfolio in terms of the stocks and allocation. My core portfolio has remained the same. I think most of the stocks that I've had or I have in a lot of my client portfolios, I've spoken about all of them: ONGC, ITC, Lupin, Infosys, Gulf Oil, Federal Bank. These are my core portfolio holdings, and I've not changed anything. I've just reduced overall allocation to equity, but in terms of the stocks, and these is very important to give a full disclosure. So I'm holding all of these stocks. I've not added anything in the last 1 or 2 weeks or 3 weeks. I've held these for a long time, and yeah, I continue to hold them. It's just the allocation between equity and debt which I've made changes to.
That's the view on metals and a whole host of other names. Metals, of course, surging up to the highest point in the day. SAIL is up nearly 7.5% right now. You've got a Jindal Steel, which is up 6%. Tata Steel higher by 6%. JSW Steel holding out very well. And even Hindalco has made a decent move of about almost 3% right now. Vishali, just wanted to understand whether after this big move on any of the metals names, you see a continuation of the trend or follow through come by.
Well, I would actually think so because overall metal sector has done pretty well, and stocks like especially SAIL or NALCO, in fact, even as far as Hind Copper is concerned, I am watching these stocks quite minutely, and I think SAIL, sometime back, it had given a monthly breakout about 133, 135, and now we saw some retracement occurring in that. So once SAIL also sustains about 135, 138 levels, I would be pretty bullish on this stock for a target of 150, 180 for a longer term time period, of course. And today we saw a good pickup coming in Jindal Steel and Power, JSW Steel. And let's talk about Hind Copper. The long term trend is so bullish, and I think 230 acts as a crucial support. Today we saw a good run up coming in. I think in all likelihood, this stock can go towards 320, 330 levels in times to come. So my view for now in all metal stocks stands positive. Even Tata Steel has given a breakout. So yes, Tata Steel, I'm looking at higher targets of 170, 180 from here on. So overall, I'm bullish on metal sector.
Okay, that's the take coming in on metals. In fact, India is not just considering a ban on export of iron ore to China. That's the word coming in from the Steel Secretary. In fact, speaking with my colleague Aishwarya Patil, he also said that iron ore exported to China is mostly low grade and underutilized in the domestic market.
Ore is exported, it's not the high grade iron ore, and low grade iron ore is not being used by our own steel mills. So steel ministry is not considering any such decision at the moment. Steel production consumption outlook, I mentioned in the calendar year 2023, the production was somewhere around range of about 127 million tons. So I mean, if one takes economic growth, the numbers are at about 6.5%. The buoyancy factor is about 1.2. So we should see the growth in these areas to be about 8% or so. While in terms of exports, it may be difficult to give a particular number because a lot of it depends on the global geostrategic situation.
So that's the latest coming in as far as steel is concerned, and that is definitely making headlines. But the other thing, Aisha, that's making headlines is what's happening in Jamnagar, because all eyes are there.
Rihanna is there. I mean, come on.
Like everybody from the business world to Rihanna to cricketers to sportsmen, you name it, and you'll find them right now in Jamnagar, whether it's Salman Khan, Shah Rukh Khan, Mark Zuckerberg, totally, and of course a lot of other names. I think Bill Gates will also be joining them shortly, given the fact that he was already in India. And Rihanna's team is something that I saw. Maybe I missed the visuals of Rihanna as well. Coming Ivanka Trump is something that I watched. And she arrived in India in Jamnagar just today. So clearly the wedding of the year, as we are calling it. And remember, these are just the pre-wedding events. The wedding is actually in July 12th. So that will be completely on a different scale. And for the pre-wedding events as well, there's who's who of the world who have come and assembled in Jamnagar. Okay, on that note, we will slip into a very short break. Don't go anywhere. Last 15 minutes of the trading session, but not last 15 minutes of the trading week, because do remember there's a special session tomorrow. So if you already had your weekends planned, maybe reshuffle them a bit, because tomorrow is going to be a special session wherein the DR testing will happen. We'll get the details for you up on the screen right now. 9 to 9:15 will be the pre-open of the first session. 9:15 to 10 will be the live trading, and for the second half 11:15 to 11:30 will be the pre-open session, and those graphics hopefully will come up for you up on the screen shortly, because from 11:30 to 12:30 is when we will have the live trading, and then the day will end at 12:30. We won't get that graphics that soon. Maybe we'll take a short breather and come back.
Okay, back with closing trades right here on ET9. Maruti's numbers as well have come out, and much unlike the trend that you've seen from the other PV makers, Maruti actually has delivered quite okay. Sorry, I stand corrected at that. 1.81 is what the ET Now poll was anticipating. And once again, it's a beat, much like its other peers. The passenger vehicle segment has actually delivered quite well. And for Maruti as well, a 1.97 lakh unit figure is definitely quite a big beat. And you can see that reflect on the stock price as well. 11,600 is where it's currently at. Still got Rajat Sharma with us, and Rajat, wanted to get your thoughts in on autos right now because, you know, it's quite a polar end, what's really happening in the farm equipment segment and what's happening at PVs. But wanted to understand, would you take a contra bet here and bet on any of the farm equipment majors?
No, not really. But if somebody was building a portfolio in this market, stocks like Maruti Suzuki and Tata Motors are still not very expensive. Now, I'll tell you why I say that. Sometime back, we were talking about metals, and I said one of the stocks that I had in my portfolio was Steel Authority of India. Now, the reason why I exited that was that stock has never traded above 3 to 5 to 6 on a price to earnings multiple number. And right now, it's trading at 17.5. So you all know what's the right thing to do in this market. It's just tempting to stay invested because the stock prices are moving high every day. Now, talking about Maruti or Tata Motors, like if you look at their price earnings multiples, if you look at the valuations at which they're trading, they're still not trading far more expensive than they have in the last 10, 12 years. Maruti Suzuki, for example, is trading at a multiple of 38, and that's where it's always traded. So that means, stocks like these have an improvement in earnings because of which the valuations are still good. But there's a lot of sectors like metals in particular. Now, I know it's really tempting with the way things are happening today, even in Bank Nifty to, get tempted and buy there. But the right thing to do would be to stay away and, reduce your allocation to some of these overvalued sectors.
Okay, point taken. I also want your view regarding healthcare and insurance with the latest news flow there. But first, let's go across to my colleague Anurag because he's getting us the latest on this developing story. Anurag, last time we checked, the government had sought the data of various hospitals from the hospitals as well as insurers to get a sense as to what the price range is of the various treatments. What's the latest that you are hearing on this?
So, as the Supreme Court has asked Union government to come up with a standard treatment rates within a 6 weeks period. So, it's otherwise Supreme Court may go ahead and implement CGHS rate. So, it's a tough task for government to come up with a standard rates in a 6 weeks period. So, in this context only, insurers, non-life insurers are ready to share data range or rates range to government because non-life insurers have a tie-up of with 40,000 hospitals, cashless tie-up with the 40,000 hospitals across the country. Majority of the hospitals are covered under their arrangement. So in the cashless arrangement, generally the prices are cheaper than the normal treatment charges because they come up with a standard rate on the procedures. So across the country, they have a tie-up with 40,000 hospitals, and recently non-life insurance industry has launched a new initiative, Cashless Everywhere, where all the insurance companies are also sharing their data and their arrangement related to the hospital. So the non-life insurance companies has offered these standard rates because this can help government also to arrive at the standard rates because Supreme Court has categorically asked Union Health Secretary to come up with standard treatment rates, and we have seen that a lot of traction also seen in hospital stocks, healthcare companies, and insurance companies are also getting insurance company think that they will get boost from this warning by Supreme Court because the overcharging by hospitals will go down. There will be parity in treatment rates. So they are ready to share their standard rate data with the government.
That's the latest, the data being collected for now, and that will decide the future course of action. But for the immediate course of action, what should the investors do? Rajat, what's your view?
Yeah, so one of my top holdings is Lupin. That's a stock which I've recommended multiple times on your channel. But other than that, I don't have many stocks from the pharma or healthcare space right now. On insurance, I may be biased here, but I don't buy insurance companies in India because I think most of what had to happen in the insurance space has already happened. And the competition is too intense for any of the players to sort of deliver very positive returns. there are way too many insurance companies, and the market size is now not growing at the rate at which it was growing until about maybe a decade back. So, no, I don't like insurance as a sector, so I've never held a stock there.
Okay, that's the take coming in on what to pick out from within the pharma as well as healthcare space. In fact, just today we spoke with Annaswamy Vaidheesh, the executive chairman at Suven Pharma as well, to talk about the merger with Cohance Life Sciences. Let's hear out a sound bite of that first before we move on.
We move closer to our vision of creating a diversified end-to-end CDMO leader from India. This is something that we had the vision right from the beginning when we took over Suven. And also the very important piece of this whole strategic deal is that it provides a consistent and stable, profitable growth. And it won't be as lumpy as what currently the business is. And also, very important thing is that now we will have multiple engines of growth, particularly 3 distinct business units: pharma CDMO, specialty chemicals CDMO, and the API plus. Cohance shareholders to get 11 equity shares of Suven for every 295 shares held in Cohance. It's a very good deal for Suven's retail shareholders, as it's likely to be double-digit EPS accretive in year 1 post-merger. So this is without synergy benefits, and quite obviously with synergy, it's likely to be higher. In addition, Cohance has been swapped at 30% discount to Suven multiple. In comparison, peers have historically traded at 15% discount to Suven. So it's a very good deal for the retail shareholders. I'm quite sure they must be very happy with this merger.
Okay, so that's the management of Suven Pharma. Of course, the stock has come off from the highest point of the trading session, but still materially in the green. But one space which is actually holding up in the green is defense pack. One of the reasons why L&T is moving higher. You also had data patterns moving up. Of course, other names like Hindustan Aeronautics, etc., were all in focus, and the news is up for you on the screen. The reason for all of that: the Ministry of Defence has signed 5 major acquisition contracts worth 39,000 odd crore rupees. 13,000 crores thereabouts has come towards L&T. You also have Hindustan Aeronautics, which has got the order for procurement of aero engines for MiG-29 aircrafts. 2 contracts have been firmed up for L&T, and then data patterns was too in focus on account of that, and all of these stocks were buzzing away. Vaishali, if I can come to you for the defense pack, the private names or the public names as well, anything that stands out and you would call a buy recommendation on?
Definitely. Actually, you just spoke about data pattern, and this is what we have been recommending to all our clients from 2100 levels, because that is the level where it gave a breakout. So I would suggest this stock is again a buy near 2500, because we are looking at a target of 2800. And the other stock as still a favorable risk-reward wise stock that I would look at is Zentek. Zentek, since a couple of days, I mean, after a very long consolidation at around 800 levels, it has started moving up. Today also, it's well up by 5% at 908. So this would be a good buy near 880, 870 levels. The targets that one would expect is around 1100 levels. So Zentek is one stock to my liking.
That's the take coming in on some of these picks here. Kunal, what would you pick out in the defense pack? Because the call a month back was ease out your positions, trim your holdings there.
Yeah, but I think the larger cap names still look formidable. HAL, BEL, these stocks have not corrected. So even if you do a corrective analysis for many of the PSU names, defense stocks, how these stocks have corrected in the last 1 month approximately, the likes of HAL and BEL, they've corrected very, very marginal. In fact, BEL is one of the least corrected stocks in the entire PSU basket. I think the stock had just corrected 3-4 percentage points. And it was one of the first ones to try and break past about that previous barrier of 200 and move up higher and make a new high for itself. HL is now done very similar to the stock, breaking past it again about that 3,000, 3,100 level. So I think both these stocks are very formidable. They've over the last 1.5 odd years, they've managed to time and again make a new high for themselves after that phase of consolidation. And I think both these stocks are have confirmed a fresh breakout for themselves. So I think current levels could be a very good level to buy both BEL as well as HAL.
Okay, so that's about the defense pack and the buy recommendations there. But what about telecom sector? We spoke with Sunil Mittal of the Bharti Enterprises Group to get a sense as to what the future could be like for Bharti Airtel and what's the timeline of achieving that 300 rupees ARPU, because large part of the street is already factoring in a tariff hike in the second part of this year. Will it happen or not, and what else he had to say on the matter? Listen in to the voice of Sunil Bharti Mittal.
Well, I think it's a function of trying to get as many customers on board before one starts to make a move. But you have seen that from 120, 130, where the industry has reached down to, the average ARPUs are now 175, 180. We are at 208. Competition is between 140 and 180, 190. So it has improved. It's taken a much, much slower pace than I would have imagined. But I think we have come to a point where investments have now run ahead. We have spent nearly 80,000 crores on 5G spectrum and rollout. Our competition has spent over 100,000 crores, and there are no additional revenues, as you know. So time has come now to start to rationalize and repair the tariffs. No, if you really look at it, the worldwide, ARPUs are significantly higher. I mean, we are talking about India at $2.2 now. At 300 rupees would probably mean $3.50. Even in the Southeast Asian countries, whether it's Philippines, Indonesia, Thailand, which are similar kind of economic levels, the ARPUs are $12, $15, $16. So we need to get to a much higher level eventually. So 300 is the number that we need now, but the industry should keep pace with the inflationary pressures that it has on cost of rental for towers, fuel, employment costs, administrative costs, etc., etc. So it's everything is becoming very expensive. But let's first get to the 300 rupees, which has been a position that I espoused 6-7 years back, and we are still only 2/3 of the journey.
Okay, that's the word coming in on Sunil Bharti Mittal, where he sees that 300 rupee ARPU coming in, which is, he says, at the end of the next financial year. In the meantime, let's just take stock of some closing strategies as well. Vaishali, come to you. Any BTST ideas you may have for our viewers?
Well, so right now at this level where market has already surged so high, I would now look at IDFC First Bank, because that is one which has not participated, and we are seeing a lot of momentum coming in banking stocks. So IDFC First Bank, technically very well placed. I would suggest a buy over here with stop loss of 79, currently at 82. I think we see good volume also, and the stock can go to 86, 88 levels in times to come. So this is one stock to my liking at this level.
Okay, Kunal, what about your BTST strategies?
I'll go with two larger cap names. Tata Steel, would still be a buy at current levels. The stock has given a fresh breakout about that 150 mark. So would look out for targets of 160. Stop loss at 144. And ICICI Bank, as we discussed earlier, remains to be a top candidate in terms of a potential breakout further. So higher targets of 1150. Stop loss could now be revised to 1050 after the strong up in the stock is shown today.
Okay, point taken. In the meantime, just pull up the stock of Aptus Value Housing as well as Policy Bazaar. Both of those stocks are coming under pressure, and talking about general insurance companies and health insurance companies as well. ICICI Lombard is also in focus. All of these stocks are in the red right now. But we're also tracking the story where Google has actually taken some of the Indian apps off their Google Play Store. And the reason was that there were some overdues from some of the Indian apps. We spoke about this matter with Sanjeev Bikhchandani as well as to what will happen to their business, what will be the impact. He categorically said that at the business level, there might be not any impact on InfoEdge, because the large part of the business comes from Naukri and that wouldn't be impacted, but Jeevan Sati and matrimony business might be impacted. Listen into a small slice of that conversation that we had with Sanjeev Bikhchandani.
So it's not as if we've been delisted. It is a notice to delist. The truth is that InfoEdge Jeevan Sati has been compliant since February 9th, ever since the Supreme Court refused to give relief to these 10 companies. So we are compliant, and we are going to reply to the notice. And let's see what happens then. We are hopeful and confident that they will not delist the app. But if you look at Naukri, it's next to nothing from the app, the revenue that is. If you look at 99 acres, likewise. It's only in Jeevan Sathi there is some dependency on the app, and Jeevan Sathi is a small business for us, so it's not a big deal. We are paying, all past invoices are clear. There's no pending invoice, and as and when the invoice comes, we will pay.
Okay, let's begin winding up for the day, not for the week, unfortunately. Tomorrow as well, we've got a special trading session split into two, but what a fabulous Friday this has turned out to be. We're starting off the month of March with flying colors, 22,300 plus a print coming in for the Nifty. It's been a solid 339-point move that we're shutting shop the day with. It's really been metals all the way. Sectorally, that's the one which has taken the charge today. So be it a SAIL, Jindal Steel, Tata Steel, Hindalco, JSW, they've all head out very, very smartly. Of course, there were blue chips like L&T as well, which pushed up about 4.5%, and that quite contributed to today's move. Banks were not left behind. IndusInd Bank led the charge with a 3.5% rally. ICICI Bank, a move of a solid 3% coming in there. SBI held out very smartly, followed by an Axis Bank with a 2.5% to 2% apiece coming in for both these names. As was the case with Reliance Industries too, it's almost touching that 3,000 rupee per share print now. 29.76 is where it shuts off, a tad bit off from the day's highs. But good trading session. It's not done yet. We'll see you again tomorrow morning at 8:55 a.m. for the special trading session.